So most people think that buying rental properties out of state is risky. That if you can't physically drive by the property, or if you can't touch it or see it with your own eyes, then you're basically gambling with your money. And that belief is everywhere. But the truth is this: distance is not the real risk. It's thinking that you have to buy the property by yourself. So in this video, I'm going to walk you through exactly how I buy properties out of state using a team. Not one person, a whole team. And that team is comprised of the following: a real estate agent, a lender, a property manager, a general contractor, an inspector, and an appraiser. And each of these team members exist for one reason: to remove a specific risk from the deal. And so this strategy isn't about being aggressive or reckless. In fact, it's the exact opposite. It's about being systematic, calm, and intentional. If we've never met before, my name's Ernest, and I'm an immigrant. I'm a US Air Force veteran, and I own multi-million dollars in rental property. And I didn't grow up wealthy, nor did I have a network of investors helping me get started. But I bought my very first apartment building years ago out of state with a team. And honestly, I still do to this day. The team members are completely different today compared to when I bought my first property, but the process is still the same. Everything that I'm about to share with you comes from my personal experience. And that includes deals that went great and lessons that came the hard way. I'm sharing all this so you don't have to learn everything the hard and expensive way. Here's what we're covering today. First, I'm going to explain why out-of-state investing only works when you stop trying to do everything yourself and start building a team. Second, I'll break down each role on that team and explain exactly what they're responsible for. Not in theory, but in real life. And third, I'll show you how this same system applies whether you're buying your very first or 10th rental property. So the most important mindset shift you need to make is this: you are not simply buying an investment property. If you want to scale, you need to build a team and a system. A team made up of experts whose job is to see things you can't, catch problems early, and keep emotions out of the decision. The biggest mistake beginners make is thinking that finding the perfect property itself is the most important thing. It's not. It's the system and the team that runs it. The investment property that you end up buying is just the output of the team and the system. Let's start with the real estate agent. The agent that you want on your team is not just someone who opens doors or sends you listings. They are your eyes and ears on the ground. A great investor-friendly agent understands local market and pricing, realistic rents, and neighborhood differences that don't show up online. They know which neighborhoods attract stable tenants and which ones look fine on a map but behave very differently in real life. More importantly, they already have relationships that you need to leverage from. Relationships with lenders, inspectors, contractors, and property managers. And that matters more than people realize. If your agent does not regularly work with investors, you are exposing yourself to risk before you even submit an offer. I rely on my agent to tell me when something technically works on paper, but actually feels off in real life. When the numbers are fine, but the street, the neighbors, or the tenant profile raises concerns. And that local intuition is something you simply cannot look up online. Next team member that you need is to find the lender. My lender doesn't just approve a loan. They pressure test the deal. They look at the debt-to-income ratio, the projected cash flow, and the reserves and loan structure. They need to be able to tell you whether the deal actually works. If a lender is comfortable financing the deal without stretching the limits, that's a good sign. If they hesitate, ask for extra reserves, or push back on some of your assumptions, you need to reanalyze your numbers and make sure they are accurate. The lender acts as your financial checkpoint so you don't get emotionally attached to the property. Next is the property manager. Now, this role is the most overlooked by beginners, but your property manager is really a key piece of the puzzle. A property manager looks at the deal from an operational perspective. They confirm if the rent is realistic, assess tenant demand, and they evaluate maintenance expectations. Now, if my property manager would not want to manage a property that I am looking at, I wouldn't even buy it. Because it's easy to fall in love with numbers on a spreadsheet. But you really can't ignore an expert who manages hundreds of units telling you, this one will be a headache. Now let's talk about the general contractor, or what we typically call the GC. Now the GC's role is to help you fully understand rehab scope, cost, and timelines. They need to be able to look at the scope and tell you if it's actually going to work. As you're analyzing the property, if the rehab costs keep going up, and the timeline is longer than expected, or if there are any unforeseen surprises or repairs, then you need to either renegotiate the purchase price or completely walk away from the deal. Don't ever force it. And believe me, I've done this mistake before, and it's not pretty. Alright, next is the property inspector. Now the inspector finds out what everyone else might have missed. They look at pretty much everything. They look at the roof, electrical systems, plumbing, foundation issues, and other structural concerns. Everything that doesn't show up in the listing photos gets documented in the inspection report. The key thing to keep in mind here is this: it's not about finding the perfect property, because that doesn't exist and you'll never find one. It's about knowing exactly what you're buying. Believe me, prices are expensive. But if you know the issues that come with the property, then you can figure out a plan to fix or manage them. And lastly, the appraiser. They confirm comparables, or what we call comps. Now, comps are simply properties that have been recently sold near the property that you're looking at. The property comps need to be similar in size, condition, and features. They're basically used as a reality check to estimate what a house is worth based on what similar homes actually sold for. They protect the lender, but more importantly, they protect you. If the appraisal comes in low, don't move forward with the deal, because that basically means that if you bought the property, you'll be buying it above its market value. And you never want to do that. Or you can go back to the seller and ask the purchase price to be adjusted down to how much the property appraised for. And if the seller says no, again, walk away from the deal. No emotions attached. Okay, so here's the most important takeaway from all of this. Each team member sees the property from a different angle. When the property is approved by everyone on your team, your risk drops dramatically. And if even one team member feels off, that's when you pause to think, renegotiate with the seller, or completely walk away from the deal. This system works whether you're buying your first rental property or you're building your portfolio over time. Out-of-state investing isn't necessarily risky if you follow this process and you listen to your team. You may not be able to eliminate risk completely, and honestly, that's impossible. But what you can do is prevent unnecessary mistakes. Now, if this still feels overwhelming for you right now, that's okay. I know this is easier said than done, but just keep in mind, you don't have to build the entire team overnight. You build it one step at a time through the buying process. And just like any other system, once you have it in place and you've done it once, it becomes repeatable. And it gets easier the more times you do it. And if you want help figuring out how this applies to your specific situation, and you're looking at the possibility of investing out of state, I do offer one-on-one coaching where we walk through the buying process and the strategy together. I'll drop a link in the description below if that's something you might want to consider. All right, and so that's it. As always, here's to your success. Keep learning, keep investing, and make your money work for you.